Good morning, everybody. Today is the 10th day in the month of February 2022, and my name is Heritage Adisa, market analyst at HotForex. And quickly as usual, like always, we'll check through the market, look at what the dominant sentiment is, look at what's going on in the market, if the opportunities, and then how we can take advantage of it. But please remember that this is just a communication material, and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a higher level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is another mixed start of the day. But we've had this play out for most of the week as we had a very light economic calendar. And we've said that until we get the US CPI, we might not really have so much to work with. Now, today is CPI day. We're expecting it to come out later in the afternoon at the start of the American session, right? And then let's look at what we have. I had this written down earlier. I said lackluster performance continues for the week, especially on the major pairs as we wait for the key US CPI prints, right? Equities so far have been trading in positive territory for the week, right? Although in today's session, we're still seeing the lackluster performance, but a big bit in CPI could hamper some of that progress, right? For the Euro side, we had the Euro as one of our major currencies for the week heading to the week in terms of opportunities. We were looking for further upside in the Euro in line with the current shift or the tilt that we had from the ECB, especially from Lagarde's, press conference during last week's Thursday's meeting, ECB meeting. And I remember saying that on that one, we'd like to see further continuation of the strength, right, against something like the pound, even I had against NZD as well. But so far this week, we've had some of the members, I had it written here, ECB members, including President Lagarde, has pushed back against some of that hawkish rhetoric that we had from, last week, right, thus adding some pressure on the euro, especially against the antipodians like the NZD and the AUD. So our Euro NZD, upside bias has not really played out this week so far, but Euro pounds is still looking good and it's still very much in play, right? On the FX side, we have FX trading mix, major currencies trading mix, right? NZD is leading the majors, but just by a very tiny margin, while AUD, even JPY are among the laggards so far today. Equities trade flat, right? Oil trades in a choppy manner so far today, although easing from the highs that we talked about, I think it was Tuesday or Monday, a couple of sessions back, right? Easing from the highs, but so far nothing much going on right there. And the VIX keeps, the downside that we've seen so far for the week in line with the upside with equities that we've been seeing so far. Bond market trading flat, right? The dollar index also trading flat, continues to range ahead of the key inflation data, right? Later in the day, we have BOE Governor Bailey on the wires. We have RBA Governor Low on the wires. We even have the EU economic reports as well also out, and then we have US CPI to play out with. Now let's just look across, the equity space, even the charts generally. For US 500, like we talked about, the equity space generally, we are seeing that overall range so far today, and it really could continue, right, for most of the European session until we get the US CPI data release, where if we have a strong beat in numbers, right, CPI is inflation numbers, and inflation, obviously, high inflation has been a worry for the US already. The Federal Reserve have been saying it, and they're looking to start to tighten, saying it's time to start to tighten policies, right, already, for the US. Now, if we have CPI come out very hot as well, it more or less solidifies that particular expectation. And what you would say, that would not be good for equities because it means rate hikes are coming in sooner and faster. We remember that some people are already calling for 50 basis point hike from the next meeting. But markets are already pricing in 25 basis points already. Now it's going further for 50 basis point hike increase in interest rate. Now, if that happens, or if you have strong CPI, that solidifies some of that bias. And obviously it's a bad thing for the likes of equities. So far, we've seen equities for the week really pushed higher, right? Up about, for the US 500 is up about, almost 0.2% for the week, right? Yes, we started a little bit more lackluster, but from yesterday's session, we had that continuous push higher, and that has given us that much to work with. Right now, we're trading very much at the highs. I mean, the highs going back to early February, and if you look back a bit as well, it was also key, resistance support level for a while now. So obviously, it's going to be a key one to pay attention to in today's session. Yes, we are above it, right, but still we haven't really cleared up the highs, of that February 2nd and 3rd. clearly. So what I would like to say is if we see equity CPI come out very hot as well, we could break back below this level and use this as further pushes downside. But if CPI disappoints, obviously we could see this move higher some more. So it could be, or it will be one of the major focuses in the session ahead. For the VIX, obviously, we've seen downside in VIX. The fear index has been pushing lower as well. Like I said, I would love to see it back below the 20 level. We're very close to it right now, right? And then that's super interesting. If CPI comes out even disappointing as well, this could push lower some more. And that will also be another better or good outlook for the likes of equities. The US oil as well has really been in a choppy manner for the week mostly, right? Coming from Tuesday, Wednesday, even today's session hasn't done much so far. I remember saying I wanted to see some form of pullbacks in oil prices before looking to go back long on this. And then we've had that so far in the week, coming back to retest the previous high, going back to 18th of January, as well as late January into early February. Now we've bounced off that level cleanly, but right now, amidst the mixed sentiment, we're not really seeing so much to work with so far. We'd like to see how CPI plays out. If it's good, it will affect the dollar positively as well, and it could see oil even being pressured, right? So there's that to also pay attention to in the session ahead. But for the dollar index, like I said, it's really, really, really been in fact, not moving an ounce for most of the week, really remaining in that range. But I remember mentioning early this week that right now we are bouncing off this key support trend line coming from early May around, okay, late May. This is late May. Let's see the particular date that this is. All right, this goes back 24th of May, thereabout. Was tested around here, similarly around the 6th, 11th of June, coming back to very close around September of 2021, also very close around November, thereabouts. Now back again in January, and now we are back at that level, right? If we have CPI come out really hot, we could see this range break back to the upside and then push further higher, in terms of that. Now, all of this said, if we have either a beat in CPI or a miss in CPI, what are the currency pairs that I have in mind? I don't know, what am I looking out for? First of all, a solid beat, attention or emphasis on a solid beat in CPI, right? Year-over-year expectation is about 7.3%. We also have month-to-month expectations as well. Let's just look at the numbers, how the numbers have shaped, right? Markets are expecting the CPI print as well. In terms of the year-over-year on January corporate there, we have 5.9% expected, hotter here, and then lower here as well on the January month-over-month print, right? Year-over-year print coming in at 7.3%. as against the previous number of 7.0%. Now, if we have a beat across board, good variance, solid, right, it could see market participants pricing in even faster rate hikes, even stronger rate hikes, maybe a 50 basis point hike for the Federal Reserve in the next meeting coming in March. And that should see currency pairs like the likes of Euro USD see further downside on this. Now, because dollar index has kept in the range, right, we've also seen Euro USD also trading the range so far this week. Now, if we get a strong beat in CPI, that should also strengthen the dollar and also pressure currency pairs like Euro USD. What I like to see on that particular one will be a break below this key 1.14 level, right? A break below it, a retest, maybe looking for further pushes to the downside. It will also be helped by the recent, less hawkish rhetoric from ECB members. So that would be one to pay attention to. In terms of that key area to anchor your risk just above the highs of 7th of February thereabout. And in terms of targeting, we have cleared this, we could be looking towards, let's say maybe towards 1.135. That would be the next key level of, support to pay attention to. Apart from this one, we could also look at the USD card. Now, with oil prices being, seeing some pullbacks, easing from the highs as well. That hasn't really seen some form of strength for the Canadian dollar so far this week. If we get a bit in CPI as well, you can also expect, US is also appreciated against the likes of the Canadian dollar. I would like to see this level as a springboard, 1.265, as a springboard, looking for further upside on this particular one, on a strong CPI print, right? Clearing out of this would even help us even better. Clearing out of 1.27 would be even a better one to pay attention to, looking for a retest and then further pushes higher. Maybe we could make a way back towards 1.275. We still have a lot of room to run. We're just at 21 pips so far today, and we still have about 68 pips to work with so far today. So that would be what I'll be looking out for if we have a bit in CPI. But otherwise, if the numbers disappoint, we have a miss. Remember that the White House has also been, warning markets about a hot print. So this would be one to pay attention to as well. But if we have a miss, in CPI. Remember that equities have been doing better for the week. It has also supported the likes of antipodiums like the NZD as well so far in the week. So if we have a miss in CPI, I expect that to pressure the euro. But my favorite pair in that particular scenario would be NZD USD. What I'd like to see in that particular one would be a clearing out of this key, key resistance level around 0.67. If you look close at this level as well, it was also the key support, very, very key one going back to mid of December last year. So what I'd like to see would be a clearing out of that level, clear out that level. Let's see. On a trade basis, for example, I like to see us clear this level to the upside, use it as a springboard, looking for further upside on this particular one. Key level to anchor your risk will not be more than today, the start of the day. This will be very interesting in terms of anchoring our risk. And then in terms of targeting, we could look towards the recent lows going back to early January around 6th, 7th, and 8th around this particular region in terms of first target. And so that would be one way to look out for it. And then furthermore, this round number around 0.675. So for the day, we're going to be looking at this particular pairs in terms of either scenarios for the CPI print. But until then, it really, really should be a very light one to pay attention to. And then once we get that CPI print, I don't expect so much, to happen in the market. Remember that the markets can always surprise in the way it reacts to data points. So obviously still keep our risk managed, still have it very much at the back of our mind that, we could still see a different reaction from market, but these are the general expectations. And then we could, have this for our own scenario planning as well. So that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best, to help. Thank you. Do enjoy the rest of the trading session. Bye for now.